Okay, fellow traders, welcome back. The boy is finally feeling better, so shout out to that. As always, first things first, make sure your chart is set to New York if you're doing your technical analysis or where you're doing your technical analysis, because we are using ICT concepts, using ICT breakers to be more specific. And secondly, we are using the 5-minute chart and the 15-minute chart to do our analysis, and largely the 15 minutes and the 5 minutes is for the analysis, and the 5 minute is more specifically for entries. Moving forward, you want to add a line at 12 midnight for the day of the beginnings, for the beginning of the day's trading, and then you want to add a line too at 7 a.m. And once you've done that there, everything on your left hand side is going to be your London session. Yesterday was Tuesday, so we have our London session here on the left hand side. You want to highlight the high, and then you want to highlight the low. Always first things first. And then secondly, you want to highlight any breakers or fair value gaps that have not been reclaimed in any way or form from the London session and the day before. Just like highs and lows, you want to keep dragging those things out into the future, because price is always going to swing to these points, and you want to have an understanding why price is swinging to this point here so that it can swing higher, or why is price swinging to this point here so that it can swing lower. So I like to understand that. I don't want to just see price moving around and be like, oh no, it's just moving around. I want to follow the storyline. The more you can interpret that, the more you get better at finding the opportunities and zoning in. So then once I've highlighted my highs and my lows and any fair value gaps that stick out, so immediately I see something I missed here, but it's always good to have it here on your chart. But because I saw this break happen in the morning session, I already knew that this was going to be used as an order block. But because I always say that, highlight your fair value gaps and highlight your breakers, so it has to be done. And then so just by looking at the 5-minute, you can see how price is using all these certain PD arrays to swing higher or swing lower. And for you to see it much better and for you to understand why it's happening, which is so important to understand the why, the storyline. Okay, so we have this old high that was taken here on Friday, and price broke down aggressively, creating a break, number one. And within that break, we create two things. Every breaker is going to have a breaking point, obviously, which is used as the breaker. And then it's also going to have an order block. So price is either going to go to the breaker first, or skip the breaker and go straight to the order block, or go to a fair value gap to find to use half the order block instead of just using the break. Hope you're following with me. So then I always highlight the break. I always highlight the break, and I always highlight the order block as well, because when price comes to these areas, I want to be aware, and I want to be able to anticipate what's going to happen next. Because this is a bearish breaker, obviously every time now when price comes here, what am I going to be looking for? I'm going to be looking for a bearish signal, because this is a bearish breaker. It had taken at these old highs here, and then started trading low, and then retraced until it takes out an old low. All I am looking for on the chart is what? Bearish signal. Because why? It has not taken out an old daily low. It has taken out a London low here, but then that's not, what can I say? I don't want to say it's not important, but in this case, when we create a breaker, that means we want to go take out some kind of old low, which is a previous day low. Moving forward, price retraces here on Monday, and it creates a what? A breaker. It creates a breaker when? In the London session. So crude depiction, it creates a breaker in the London session. So we've created this breaker here on Friday, and then we create another breaker here. Then all you need to do in the New York session is try and find a good point to get into this this flow for the trend. So it's all about getting in with the bias. It's all about getting in with the bias for the day, not for the whole month, for the day. Hence why I only look at the 15-minute, and using the 15-minute old highs and old lows, you will be able to differentiate. I'm sorry, but I just needed to give you that storyline there. So then price, it has reclaimed this breaker, so now it's going to use this old high here to sweep it. And where are we going to? We're not just going to sweep it for nothing. Everything makes sense. Everything connects. We sweep the high to go to the order block. Immediately after sweeping this high, we connect to the order block. We create a what? A break in market structure right there. So what does that say? So now, whenever we get a break that's like this, a high, and it's got a long ass high, and then it breaks down, you want to measure that whole high. So this case here, it's the order block. You want to measure that, and you want to use half of that instead of coming in at the break, which you can do, but you're gonna have to, it's gonna retrace deep with you. And once you've been around on the charts, you start to understand, you know what, I don't like that feeling of going into a trade too early, and then it takes me deep before it takes me out. That's just going to give you anxiety. So you measure half of the order block, and then on the 5-minute chart, you are able to narrow it down. What am I able to narrow it down to? All I'm looking for is some fair value gap. But then now, the more advanced you get, you kind of know that the possibility of it coming straight to that order block is very high. Just need to change the color around there. It's very high. So what do? I put an entry there, and I just let it live. So then when I came back, my entry had been filled perfectly, and we started trending lower. What am I aiming for? As always, we are never being greedy here. We are never being greedy. I will say that till the end, until it's like drilled in your head. Once you master not being greedy and learning to go in a trade, take your profits, and stop trading for that day, you would have learned the greatest skill. The greatest skill, I promise you. So this was an amazing trade. Did it keep going? Hell yeah, it kept going. And then what did I do? Obviously, I entered again. But now, this is where now shit gets advanced, because you need to understand how to enter a trend. So we've broken down here. So over here was the first breaker in the London session. In the New York session, we just retraced to the order block. The trend started flowing. If, let's say, hypothetically, you had missed the first entry, there was a second entry right here. Hence why this order block is highlighted. So now, if the trend is going down, every green candle is just an order block. Price is just adding those so that when it retraces, it has a place to come in and join the trend again, so that it doesn't need to go all the way to the top. It doesn't work like that. Does not work like that. Yes, it will happen if price is being extremely volatile, where it will hit the order block like 2-3 times, but most days it's going to hit it once and keep on going. And so on the 15 minutes, these order blocks are highlighted. Price, after breaking here, after breaking down, we wick literally just once, and I missed this wick, and I was like, damn, because whenever that happens, I like to put another move. I missed that wick because it happened so fast, and then I came at some time, I'm like, what? So we wicked. Cool. I ignored it. What did I do? I waited for another order block right there. So then, as soon as this order block formed, I wanted to see what? I need to see the bearish signal. I need to see the bearish signal. Always, 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 always. And the more you start to practice, the more you will realize that these are your signals. The chart will give you signals as long as you understand price action and you are reading it in a certain way. In this case, I'm using ICT concepts. That's how I'm able to interpret what I'm seeing. Join the trend, and then so as soon as this here happens, I now have a new low that I can aim for. So, not being greedy. I never want to feel like, oh no, I can just aim for another previous day low. No ways. This is gold. So I'm always taking it nice and easy. So just a quick add-on, quick. What is price doing right now? Because why? The most I can do or we can do is predict one move into the future. If you understand the bias, we are bearish. We're not just going to miraculously change around. And if we do, so I highlighted the order block there. All I'm doing is just dragging that there. Why is this the order block? Because price keeps breaking down and taking out the low. Simple as that. As long as price is doing that, they're creating higher highs or higher lows, and then keeps breaking down to the downside without taking out the high, we are still bearish, because it may retrace, but all it's trying to do is find some order block to find its footing so that it can swing lower. It's looking for some liquidity gap, some kind of breaker, some fair value gap, so that it can just keep on swinging lower. So yeah, that's that. So that's a fair value gap right there. It's a bearish fair value gap, so that should be red. But they're not called they are not called bearish fair value gaps. Please don't hold a gun to my head. Buy side inefficiencies. So right there, price came up, gave us what? A bearish signal. So if you were in front of your charts, then you could have entered and aimed for what? I'd be aiming for this section here and aiming for this low right about there. But you do it in increments. So me personally, if I was up for this trade here, from there to here, right there, and then I'd wait for another signal, because why? That's nice low hanging fruit. I can guarantee that. I can sleep on that. Even if it retraces back on me, it's not much risk. I can sleep on that. But then if I was watching the trade, then I'd manage it slowly until it got down to there.